Righty ho, everyone, and welcome aboard. It is wonderful to have you as our trading buddies on this Monday, the 18th of July, 2022. Thank you, Marlon. Welcome aboard. Thanks for being here. Let's get underway, shall we? You'll have to forgive my voice, and I hope it holds up. I do have a little bit of the flu at the moment, not COVID, the flu, and it won't go away, I've got to say. Trying to get rid of it, but it does persist. Rightio, first things first, let's get into the pound, shall we? Or see if we can get into the pound. Those of you who are not aware of this particular setup or system of trading, it is in trial mode, beta test mode, if you like. So please treat that as such, and if you're looking to actually follow this, please do not put any meaningful money on the table because, as I say, it is unproven. It is purely test. Sharing it with you just so you can see exactly what's going on. I'm not trading this with any real money either. You know, a few dollars, that's it. It is at risk here and nothing more. It really is just to find out if we can get this system so that it is a reliable one and we can actually make money from it. If it proves not to be the case, then we won't be doing it any further. But we'll give it a good shot and see how we go. The current system is, of course, looking for a breakout of the range. The range for the purposes of this exercise is from Tokyo Open, which is there, the 0200 candle in my case, and the high of that range between then and now. Low of that range is here, high of that range is actually the current candle, and wherever we close at London Open, we trade in the opposite direction. So we pick the midpoint of that range, which is here. The high of this range is currently 1.1909. That's the high. The low is 1.1874, and we pick the midway point, which is 1.1891. So 1.1891 will be our entry, and we'll be trading short. So the rule is, if we're above the midpoint at London Open, we want to trade short. If we're below the midpoint, we want to trade long. So today we'll be trading short, unless there's a miracle happen in the next minute or so. And our entry will be this one, 1.1891. Our first take profit will be the low of the range at 1.1874. And our stop loss will be the high of the range at 1.1909. Now, again, if you've just joined us, this is a test and not a proven strategy. So please do not put any meaningful money on the table. I'll set this up on the trade manager, then I won't have to worry about it. And please take note that I'm putting 0.05 of 1% on this, and it will be a market entry at 1.1891. Stop loss will be 1.1909. And get rid of that. I'll go to TP1. Get rid of the 6 pips. Get rid of the enable stop loss. No, don't get rid of the enable stop loss. Sorry, we will be using that. Oh, I better hurry up. Won't be taking anything off at TP1. I'll just move my stop loss to entry at that point. And TP2 we can dispense with. Okay, sell. And there we go. We have the order in the market. It looks like they want to go long at this point, and that's fine. When they change their minds and go short, hopefully we'll get in the trade and get into some money. Entry one, right? We're all good to go. I can see Ash is in the room. That must mean he's got something of interest. G'day, buddy.
Oh, no, it's not that, mate. I just thought I'd join you. I mean, we could have a quick look at the FTSE because I think we are going long today. There's Let me just shut these seagulls up. There we go. Yeah, we are going long today if we can get the opportunity, but we got to get an attractive price point. So let's see what that might be if you like. But we can go and do your stuff first if you prefer. It's up to you.
Go your way. That gives them the notice. Yep.
Alrighty. So markets, they look pretty good to me at the minute because of exactly what I said yesterday on the Sunday analysis show. I just think that the dollar's likely to see some profit taking, and that means that other assets really start to go up. There's the trend line on the FTSE. So really, and I like this trend line because it correlates with a nice horizontal level here. Runs along quite well. When we look at the daily, it's pretty much where we opened. Now, I don't know whether, I don't know why that's not working. I don't know whether it's going to come back. It might be that we just don't get the opportunity today for it to come back. It looks pretty bullish. There's the target, the monthly pivot. So target is 70 to 29, which is around about 60 pips above from current price. But the entry is a whole 40 pips below. I'm not sure whether it's going to come back. I mean, it looks pretty hot today, to be quite honest. But you know what? It's one of those things that we've got a break next week, so I think I need to be particularly careful about what I enter coming into the week because I don't really want to be going on holiday with open positions. I want to be, pretty clear when I'm away and not be thinking about it. So I probably won't just dive into this. I think I'll wait and see if the market can come back a little bit. We'll get to some analysis about the dollar again later on, mate. But that's what we're watching out for here. If anybody's on looking at the FTSE this morning, you're looking at the UK 100, I suspect, and your price will probably be along this trend line here. So all I've done is I've taken the 4-hour chart and looked at the 27th of June, might be the 28th, starting a trend line there, and then just extrapolated right down to the next point, which was on the 12th of July. And I'm aiming for really around this red bar. So it looks like around about 71.80 for the UK 100. If it dips back under here, we're in a little bit of trouble, but I'm not anticipating that. So I'll be buying it here. I don't want to hold positions. However, I will buy the FTSE if it comes back to a good price.
Cool. It's only Monday, mate. Get in.
Yeah, that's the thing, isn't it? It's only Monday, and if the worst comes to it, then I've just got some positions hanging around for a little while. But no big deal, mate. I'll be looking for longs for sure. Not for very long. I've got to be. Well, I mean, obviously, I don't trade for very long anyway. But I think everybody can start looking around. And as I say, we'll get to some other analysis later on because if Simon's in today, he probably want to talk about the Nasdaq, which also looks pretty good for a pop to the upside, and the Nasdaq may well start come up to this level, and may well use this particular level as a possible neckline. So that's what I'm kind of looking at with the Nasdaq, is that that there's a chance that we actually get the start of what would be an inverted head and shoulders, left shoulder there. This is still the head, so coming up and making a neckline. So I think the Nasdaq has potentially got another 5% move in it before we start to see some genuine resistance. And you can see how strong that level is. Look at that, right over here, over here.
Sure.
So does it get sucked into that area? I think it should, mate. I think it should. I think we're going to see some profit taken on the dollar, in my opinion. And that drives all the other assets in the opposite direction, but only for a period. So maybe a 5% move in the Nasdaq would be favourable. Other things are there of interest, but I'd be focusing on the indexes right now.
Yeah, look, 100%. I am trying to learn a little bit, I've got to say, about these indexes. And one thing is completely obvious to me is that now is not the time to be short. Despite my bias to that side.
Yeah.
So I agree with you. I think we've got a little bit of a rally to go to resistance. But then I'm keen to get back in short. See how we go.
Yeah. I think that's the key, isn't it? Is that having sort of like having different time frame expectations is really important to trading. So you don't just go, I'm a bull, so I'm buying, and I'm just going to hold it onto it. You have to kind of know what kind of period you are looking for that to last for. And I suspect it's probably a week. I mean, I wouldn't put my neck on the line to say it's too much longer than that, possibly into the end of the month. But remember, we got the Fed out on the 27th of July, so that could change things around again. So I think this week maybe see some upside, and then we'll reassess.
All right, let's go through some game changes then for the currency pairs. Actually, I'm going to include a couple of these indexes in my analysis, just so you guys get a feel for what I'm doing at the moment as well, because I think in the short to medium term, my focus is going to be far more on, in fact, probably the long term, on stocks than it will be on anything else, because I think the opportunities will be there once we see the bottom of this bear market. That could be a long way off, I've got to say, but that's good. That gives me time to actually get a handle for it. Right, Aussie CAD's the first, and game changer bars, for those of you who are not aware of what I call a game changer bar, it's actually a key reversal. You may recognize it as a key reversal. Now, this is a little bit different to those of you who have the market scanner. The Actions 12 market scanner is a criteria on there. I'm not sure if it's on the most recent ones, but it's called market direction, which isolates reversal bars, not key reversal bars. What's the difference? Well, key reversal bar for mine is a bar or candle, if you like, who will or has the potential to actually change the direction of the market. Now, you can see one here. And what this actually depicts is a candle or bar who has a high higher than the previous bar and closes on or near its low. That's the criteria that I use, right? Now, if it's got a green body, all the better for me if it's going short, because it gives me that little bit of insurance that if the bulls are in fact in charge, they'll continue on without taking me into a bad trade. But in this case, of course, that wasn't the circumstance, and the market did fall away. This one here is going in completely the opposite direction, of course, but very, very similar bar that has a low lower than the previous candle and closed on or near its high. It doesn't matter what color these bodies are, by the way. I prefer them to be red if we're going long and green if we're going short, but it really doesn't matter what they are. They're game changer bars for mine. The key with them, of course, is, as with everything, you have to trade them in context. And the context becomes a little bit subjective, I guess, but really what I'm looking for is the primary, either A, trend, or B, market structure. Now, the trend here on the primary chart is very, very difficult to actually be confident about because it's all over the shop. In fact, we've been going sideways for a long, long time on the monthly chart. So what I'm then therefore looking for is a chart pattern that tells me, okay, the dominant feature here is a double top or inverted head and shoulders or whatever the case may be. I don't really see something here that's compelling to me. That big spinning top sitting there is completely confusing the market here. What's going on? Don't know. Otherwise, if that was a smaller candle, you'd think, all right, this is on its way up. I'm not convinced of that. So I really don't have a bias here. And what I need is that bias to match the game changer bar. So the game changer bar is useless of its own accord, but if it gives me confirmation of something else, then I'm happy to go with it. I don't have that confirmation here. So for that reason, I wouldn't be trading this. The second reason I wouldn't be trading this is that resistance area right there. You're risking all of that just to bump into there. So it doesn't make sense to me. If we did bump into there, come back and get a higher low, different story altogether. And that is how I use game changer bars. I don't necessarily trade them, but they do give me a directional bias for the week. So I'm looking for that higher low now to match that hammer and therefore get long. I'd want to be taking profit at that level, of course. So I won't go through that process with all of these. There are about 7 or 8 of them, but you'll see that they're very, very similar in nature. Again, a game changer bar suggesting that we go long. Same applies. It's a 1 candle out of context, so it's a no from me, but it does potentially put me on notice that there may be a long coming up. CAD Swissy, double top, lower high. Makes much more sense to me to trade that short than it does to trade the Aussie pairs long. The one issue that you've got here, of course, is that you have a support area coming right through here where it's been resistance in the past and support in the past, not too distant past, and therefore makes that very, very difficult to trade into. Again, I've got a directional bias, so maybe another lower high here or a false break of resistance on a smaller time frame. Then I can look to trade it short. That's CAD Swissy. Euro CAD, an all-time. It seems like since I've been born, this has been going down, 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 down. It's been a long time, and a long, long time. I've got to say, it's well over 18 months, I think, since this has just not had a breath, really. Is now the time? Maybe, I don't know. But this is a game changer bar suggesting that we go long. Same applies here. It's in isolation. It's 1 candle. Doesn't mean anything to me until it shows me a higher low. So I'll be staying out of that one as well. One day I'll
that's an interesting one, isn't it, mate? Because I mean, the big question, of course, about the euro is what are the ECB going to say this week? The fact they've got so many issues just floating around, and then it's just being compounded again by the Mario Draghi situation. So it's very difficult to kind of understand why anybody would be buying euro, except for the dead cat bounce kind of scenario. There'd be or the possibility that the ECB come out and say something relatively hawkish, but they've got their monetary policy statement, which they are kind of due apparently to raise it by 0.25% on Thursday. So that's a reason, I suppose, that the rate of the euro is about to change. Since however many years ago, from 0 up to a quarter of 1%. So that's a reason, I suppose, you could say that the euro has a little bit of a pop. But as I say, there's so many problems with the euro.
Yeah,
so many problems. And I guess people would look down here and say, I'm not selling it here. You know what? I'm definitely going short, but I'm not selling it here. So as the potential bears come out of the market and some of those that maybe there's just a little bit more demand, supply of euros just comes out just a little bit, just to kind of create a small pop with it. But fundamentally and structurally, the euro just seems in so much trouble.
Yeah, it's like and that depicts it fairly well, I suppose, that candle. It's like a drowning man seeing a straw floating on the surface. You want to grab hold of it, but there's not going to be much there. It's not going to help too much.
Yeah.
Anyway, that's kind of where the Euro CAD is. You'd be a brave man to trade it, but the signal is probably there. Again, I'd be wanting to see a higher low here on a smaller time frame. Maybe that appears on the daily, and maybe there is a little bit of upside in this. Certainly, that is giving you that appearance, and a higher low in here would make sense for a little speculator if you want. The problem I have is trading it against the Canadian dollar or the Aussie, for that fact, because those or that pair, the Aussie and the CAD in particular, have, to my mind, a greater chance of being solvent than does the euro in the near term. That doesn't change the chart. As you said, people want to take profit at some stage if they've been selling this for a long, long time, and if they get a little bit of confidence from the ECB, then why not? I think I'd rather trade, and this sounds stupid, the euro against the dollar.
Yeah, I totally agree.
Been so strong.
Totally agree.
I think I'd rather trade that, but we'll see how that pans out.
Yeah, I think being a dollar bear this week makes a lot of sense. You know, it makes there's quite a lot sort of stacking up to suggest that that things will actually buy up against the dollar, and that means the euro, the Bitcoin, gold, silver, equities. You know, everything should get a push this week from what I've seen, and the dollar should ease down. And I guess what, people might buy the euro just because Christine Lagarde may say something slightly more hawkish than is expected. So going into the meeting, we might see actually some euro buying. Coming out of it, I'm not so sure whether it'll hold, but maybe going into
could be
it,
a different story. We'll
yeah.
See. I've also got for this pair in particular, the Bank of Canada will announce, or not the Bank of Canada, whoever does that, their Bureau of Statistics over there, will release CPI figures. I think they're year on year. So they will be significant as well. I think that happens on Wednesday from my memory. I'll just do one more. As I see George has come into the room, we'll go to George pretty quickly. Euro pound is really interesting. It's suggesting that we go long here. And I have difficulty with that one as well. It is a reasonably strong bar. I suppose at a reasonable support level. I don't think it's the strongest level on the chart, but there is or has been support through here, has been resistance through here. So maybe it's already bounced as far as it wants to go. I don't know. But the real euro pound chart that I think makes sense to me is this one. And it's got a bit of a logjam coming up. If I get rid of that one just for a second, you can see where I'm coming from. My market structure tells me, and we've been speaking about this for ages, and we missed that first move, unfortunately, because we didn't get a pullback. But this was clear to me that this had to have some downside. The problem I now have is, and I was looking for exactly that candle really to trade this short. Or, okay, not exactly that candle. I would like to have seen a tail on the high side, but a nice green body would have been good. I think now I have to wait because of this trade line, which is telling me this is a buy zone right now. So I don't want to get into this just yet, but I think it's in a beautiful position to set up for a short if this does indeed become a buy zone and maybe hits, I don't know what level, maybe there somewhere, maybe there, to give me the lower high that I'm looking for. And as soon as I see that, I'm in like Flynn to trade this short, but it's not there just yet. So I'll be leaving that one alone. All right, I do have a few more to have a look at, and my watch list is very small, but I'll get to that towards the end of the show as well. There's nothing urgent. One thing I will do before we go any further is euro dollar. Have a quick look at that. This is setting up fantastically for me. The higher that goes, the bit more I like it today. And the reason I say that is because we have that untested daily pivot here. The problem I have is when the daily pivot statistics are calculated, which I haven't done for ages because I haven't done a course for ages. I normally do them during a course. And oftentimes you'll find that if the market does reverse, then this does not happen. We don't get a daily pivot test. And we are at the point right now of the market reversing. So just be aware of that. If you use the daily pivot as a guide and a probability factor, which I recommend that you do, this may not be the day for that. As we've, Ash and I have already said that we are dollar bears this week. This may not come back for a day or so. In fact, if the strength that I'm seeing at the moment continues, we might not see a daily pivot test till Wednesday or Thursday. We will see, but that doesn't stop me. Doesn't stop me knowing that that number still exists. So if I did see the market reverse here on a 30-minute chart, like a double top, lower high, then I'd most certainly be looking to trade it down to the daily pivot, but no further than that. I think that's your target, and I wouldn't be looking to trade it beyond there. So we shall see. Down from the mountains he came. Morning, George. How are you, mate?
What do you guys do?
You can't hear you at the moment.
Hold on a second.
Very soft, but you're there.
Let me just pull out. Is that any better?
Ah,
Oh,
perfect.
that's better.
Yep.
That's
You are down
interesting.
from the mountains, are you?
Yes, I'm back in good old Joburg. It's
Yep.
smoggy and typical big city, but I'll keep the fond memories of the mountains as much as I
It's
can.
nice to have that fresh air, isn't it?
Yeah, excellent. Good to see you guys. Trust you all well.
Yeah,
Yeah, doing really well. Do you know
well.
what? We got the hottest day on record. I think 40 degrees today in London.
Ooh,
Oh my goodness!
you'd
Yeah.
be complaining about that.
No, that's,
I don't mind.
that's-
I'm next to the beach. Doesn't bother me.
You got a nice sea breeze. All good.
Could take a plunge.
Yeah, well, it's the sea breeze from the sea. You know, I just dive in there. I'm loving it. I can't imagine anybody in London's loving it, but I'm loving it.
Wow.
I can't imagine they are either. Mate, you're away from the charts for a week, or did you take your computer up there?
I took it up there to honor my commitments for Wednesdays at the market.
Oh,
we're
mate,
in
they
the
would have
market.
forgiven you, you know. Had you said I'm on the mountains and I've got a lovely bottle of red wine beside me and my beautiful wife, they would have forgiven you, I'm sure.
I probably should have done that, but I think the guys that logged in and took some of the trades were pretty happy. We
Oh, well,
racked
there
up
you go.
Brilliant.
percent of profits there, so that was good. And also 4 hours wasn't bad, so could play with that.
Cool. What are we looking at, mate?
Yeah, what's interesting now is I'm just going to show probably just 4 charts very quickly. I'm in my mindset now is bearish at the present moment, and this is the daily charts. And if I look at it, most recent price action UK 100 is this converging triangle, and that's one of the breakout mode patterns that I look at, because anytime you have a breakout of a converging triangle up or down, the market will tend to come back into the apex and test that apex. So first of all, this huge bear sell-off, I think this structure here is part of just a pullback, complicated pullback, but it is a pullback nonetheless. So when I go into the 5-minute, I'm trying to find ways to get in and sell, either of a reversal, just coming out of failed breakout above these highs here. I mean, these highs, this tight trading range, and you can clearly see every time the market tried to break out, failed, tried to break out to the low, failed. So there's a strong magnet that's going to pull the market back here, a higher probability of that taking place. So when I'm down at the 5 minutes, UK 100, I'm just trying to find ways to go short. And how will I do that? Well, firstly, already there's a bit of a wedge pattern that formed. Let me just move this out here up to the open, just 20 minutes ago. And we started off with the trading range candle. If you look at the open of the day, again, perfect doji first candle. So all of this seems to indicate to me that today will end up as some form of a trading range, which means there's likely opportunity to sell if the pattern sets up here. And if we accelerate all the way down, at some point, conforming to those trading range candles, we saw those dojis on the daily, they might also be buying at the end of the day. So, whether you stay into the end of the US session or not. Present moment, I'm looking to find ways to sell. Where will it be? Well, already I've seen that wedge happiness. That doji candle, first candle, top of the hour, we had the measured move. So I'm waiting to see if we get double top, lower high. Now, because we are above the high of Friday, I mean, this as much as I'm thinking bearish, still the bulls have controlled the market so far. So I really need to be patient to see double top, lower high, and not just rush into it. Interesting, this light blue line here was the midpoint of the range of the first 6 months of the year. So that's also pretty strong magnet. I mean, the bulls want to stay above it, the bears want to get below it. So I'm keeping that there just to see how much of an influence it has. So
Would the dollar
UK
play
average-
any part in this for you, George? I mean, with the dollar kind of at those extreme levels and potentially some profit taking kind of coming in, it will probably have the reverse effect on things like the FTSE and the Nasdaq and many other assets. So does that play a part for you when you're kind of looking at the FTSE, or is it not really a consideration? Are you just thinking, look, here's the structure on the FTSE and this is what I need to do?
It's just about the structure. It really is.
Okay.
So I get back to this. I keep reminding myself of this structure that we've got. These overlapping candles. So this price action here, really strong. Magnetona hold the market in that range. I mean, whoever breaks out of it is going to be strong. But we'll see that clearly on the lower time frame chart. So far, if you look at today, even though the bulls are above the high Friday, there's no strength here. I mean, it's just trading range behavior, which means at some point the market will come down. Whether it break beneath here or not. So I'm really just interested in the structure,
right?
And I want to just trade the structure that I'm seeing in front of me. Okay, so I mean, if you ever look at the German 30, again, what I'm seeing in terms of structure is bear price action, spike, and a channel. Okay, and that's typical of any trend. You get the breakout and you have the channel, and the objective of the bears creating that was to get down here. That's where they want to get to. But that level there, which is low of 2022, is what they need to get below. Now, if I'm trading off the 5 minute, I mean, there's huge, price action gap still to work out. So much opportunity if we bounce off the 20 EMA, which the market hasn't gotten to. I mean, since what? This is early June. So I use the 10 EMA to indicate strength of the trend. So it's a very strong bear trend. But any reversal, I need to see it coming off, breaking above the 20 EMA, creating that gap, that moving average gap, which would mean a bull candle that is completely above, or any candle, rather, it could be a bear candle that's completely above the 20 EMA. That would be an indicator that the bulls are starting to reverse the market and it might just go into a trading range. As it is right now, I'm waiting to see if the 20 EMA, the bears are going to defend that. And that's that kind of bounce off there when I go to the 5 minute. I mean, for me, the bulls kind of got above the high of Friday. But again, nothing in here tells me that, wow, the bulls are so strong. Look at that breakout and the market's going to keep going higher. So bearish again on German 30, which also reflects itself, if we were to go down to the Euro stock 50. I mean, the top 50 companies in Euro there. So bearish again, bit more bearish price action so far since the top of the hour. But what I want to see is double top or a lower high, and then I'm going to be looking to go short. Then the usual stuff where you put your stop, measured moves, etc., etc. Just one more Hang Seng 50 tight bear channel, and if I look at it, I mean, looking at last week, bulls were strong at some point, sold off, bulls sold off, bulls sold off. So still in that tight bear channel. I mean, if we end up with a bull candle here, we're still going to test the 10 EMA and that descending channel. So again, I am bearish. Now, Hang Seng 50 is interesting. Just although we go to the measured move of that opening trading range. Okay, that's the measured move. Bulls were still strong enough to break above it. So you have to exercise a little bit more caution here because this is, unlike the others, a strong bull breakout above the high of Friday. So not in a rush here. And really need to see bears coming down, breaking beneath that before I consider this. So keeping my eye on UK 100, German 30, Euro stock 50, same structure as German 30. Just depends which one sets up nicely for me first. And I mean, the rest of these I'm not going to jump into because I'll probably look at them later on in the afternoon if I'm still alive and active. But that's where I am, gents.
Interesting, mate. Interesting. Yeah, go on, Jeff.
Mate, using your measured move system,
Yes.
do you see, and it doesn't matter which index you choose, do you see a potential end to this bear market anywhere?
Yeah, let's just pick a couple. We'll do UK 100 and we'll just look at German 50 on the daily. Okay, so I'll pop them up, and for me, the UK 100, this is a potential end.
What price is that, George?
That's about 6813. So in the 6800, that area, that zone. Okay, and the reason for that is, I mean, there is multiple factors here. There is the measured move of that bear breakout. So starting from the breakout point to where the bear candles ended, and we get to that measured move there. Then if you consider starting where the actual selling off started, the high of this candle, and where the pullback ended, the measured move is this extension here, again in that particular zone. Could also just put and consider this whole thing as a trading range and say, well, if that trading range, you know, it just overshoots a little bit and we're down there. But if you put, let's say if you use the line charts when you have a trading range, look at just the closes because those are extremely important. Again, we are in that zone. So for me, for the UK 100, whatever happens, I think the bears, or there's a higher probability the bears want to get there. And that's where bears who got deep pockets, who've taken some profits and are holding, you know, they want to get down here and then wait and see if the market reverses or if they get acceleration down. But that's that. For the German 30, using that same kind of, just thinking, the potential low is not that far off. 12.145, that kind of zone. Again, if you look at that measured move, and if you were to put remember the measured moves is just, I look at it in two parts. There is the actual just breakout, and then also the first leg of that sell-off, right to the, and pull back, the first pullback. So we're almost within that zone. So I think for German 30, and interesting to have a look at quickly at Euro Stocks 50, the daily. There's a little bit more, I think, downwards on the Euro Stocks 50 to the 3200 level, whereas just the top German 30, they're pretty close to where I think by probability the market's going to be bouncing off in this area. So a little bit more selling to go before we probably enter into a trading range and then see if we get a reversal, you know, towards the end of the year. But the bears are strong. They want to defend their positions.
Yeah, I don't think you can argue in this room, mate, about that, frankly. So thank you for that. Ash, did you have a question for George as well?
No, I don't think so. Your question was very good, I thought, actually, because you know, looking where that technical kind of potential turnaround is how, you know, I'd want to know how that coincided. Of course, you know, I want to know how that coincides with some of the data. And I was just here sort of thinking that we are all expecting recession. We're all expecting sort of like, you know, things to come down. Earnings season so far hasn't been too bad. And it's going to be speculation about the next potential, you know, what happens to the next earnings season. And I was just sitting here thinking, but, you know, the difficulty with kind of predicting things so far in the future of course, is that there are things that can change very, very quickly. Just like we've seen in Italy recently, just like we've seen with the UK recently with Boris Johnson, just like we see with the even the Bank of Canada raising interest rates more than expected, the Swiss National Bank raising interest rates more than expected. CPI is not really coming down, so supply could come back at any point, really. And there could be some sort of resolution in Ukraine for whatever reason, and it makes it very difficult to kind of have something too far out into the future. I think looking for the overall trend right now to the downside is the right one. And as I say, I think that it's a really good question where that measured move is, because I just had a quick look on my chart where that comes in at 68, and I think if you were really, really doomsday about this, that looks pretty shallow. But you just don't know. We don't know how shallow or how deep the potential problem is going to go with recessions. We don't know. The Fed are going out pretty aggressively right now to kind of raise interest rates, and I'm sure part of that must be because, as I said yesterday, they must be getting ready to go. We're gonna have to act. We're gonna have to reduce interest rates. We can't reduce interest rates from zero, so let's get them up. Let's just pump them up as high as we can, as fast as we can. Let the market kind of resettle down, and then if things start to go to the wall, then we can start pivoting our position a little bit. But I think the measured move is the right one to go for. That doesn't look to me, I don't know if you guys agree with that, but that doesn't look to me that's outlandish. That looks like a fair target.
Yeah, look, 100%. I think it's conservative, frankly, but
yes,
it is what it is.
Yeah, well, I guess that's my point. I guess that's my point is that it could be conservative, but actually we don't know what's going to happen. So to aim for that first, to see what happens after that, is the right thing to do, isn't it? I mean, having the conservative approach tends to be the best way to trade anyway.
Yeah, and I mean,
don't need to tell me.
Yeah, I know I think Jeff, you hold long-term positions, so I mean, it really becomes interesting how you evaluate, whether to reduce your positions or increase.
Yes.
Whereas I'm looking at this and say, hang on, there's a magnet. Let's drill down and see if that pulls the market down or up, and let's optimize and then out. So it's a bit of different thinking now at how at the macro level where things are going to go. I think you probably would weigh them a lot more. I want to see the strength of the magnet in the short term, if that makes sense.
Yeah. I tend to go weak in the knees at times, George, when you're on a really good thing, and you get to the point where I'm 3/4 of the way to target, but I can see this is happening. We're going to get a big retracement here, or is it going to be a reversal? All of those things weigh on you when you've got a long-term position. So I've tended in recent times just to trail, and as soon as I see that potential turnaround, I trail a bit tighter, and if it does go through my stop, I look for another entry. I don't think that's the end of the world,
No, I agree, mate.
And I'm not giving up that big gain that I've already got by trailing.
Yeah, I mean, it's interesting. It's the same. It's actually the same kind of thinking on the 5-minute, because if I've had a big move in the day, and I'm kind of coming to the US Open, for example, and I'm kind of saying to myself, well, do you want to hold your stop far off, and hopefully that whatever price action is at the open of the US confirms that your trend assumptions were correct and you get a little bit more, or do you want to just trail the stop, and if you get stopped out with the movements at the opening of the US markets, then that's it for the day. It's the same kind of thing at the 5-minute time frame.
I think it's the same for everybody. Every trader has that battle, and as much as we kind of we fight against the emotion of sort of like just sort of saying I just need to kind of clear the slate, or I want to make some money, and we try and fight against that because the system sort of tends to work out. So part of it does come back to just wanting to not think about it. Just don't want it in your mind. So you take your profit, and okay, you're going to get frustrated when you see that's gone a little bit further, but only until the next trade's triggered. And if you trade quite high, high frequency, then it doesn't really trouble you so much, does it? I mean, as I said before, the amount of money that I've left on the table this year is crazy. But actually, when I look at the actual profit, I'm like, well, it's all right though. How much do I need?
Yeah.
It's just like, how much? What percentage do I need to make a month? It's absolutely fine. It doesn't. I don't need to kind of squeeze every single move out of the market. And actually, I prefer just to kind of have a day where I'm just, a session after I've finished, just to go and do something else and not be looking at my phone or running home to see if there's what's happened to my trade. But that's just personal, so not everybody's the same as that, but that's just the way I like to do things. And I suspect it might be the same for you guys.
Once you've been trading for a while, that's definitely the case. You don't want to be in front of the charts, any more than is necessary. 100%.
Yeah. Well, I mean, the
George,
question
I'm sure
for always is if I traded as best as I could on each day, and you get that momentary, oh man, I could have, but I know I don't want to, stay up all that long. So I look at it, I go back and say, in the hours that you were there, you ought to have done X, Y, Z. So go back and find out why you were too slow or whatever. But beyond that, it's done. The next day, there's more opportunities,
Yeah.
I look at it this way, and I've seen this happen so many times before when I used to watch quiz shows a bit. And invariably with these quiz shows, the champion carries on to the next week and the next week, or whatever the case may be, and they reach a level where they might have won, for argument's sake, $50,000. But if they come back tomorrow, they might win $75,000 or $100,000 if they come back. And the question I've always asked of those people who say, no, I'm coming back, I'm going to risk the $50,000 that I've just won to come back and get another $25,000. My God, that's so unknown what's going to happen tomorrow.
Yeah.
Just because they won today doesn't mean they're going to win tomorrow at all. So let's say they earn $30,000 a year. Are they really going to put $50,000 of their own money, which that is at that time, it's their own money, they could have walked away with it. Are they really going to put $50,000 on the table to win 25 the next day? And the answer for me is 100% of the time, no, sir. No, thank you very much. I'll take the 50. But and I equate that to exactly what I've just been talking about. Profits are not all that easy to come by, and if you continue to bank them, you won't go too far wrong.
No, you never know what's going to go on. I've just got to tell you this, guys. I'm just looking at the stocks on the FTSE this morning, just to sort of see, what kind of sentiment we've got. Very, very bullish. AstraZeneca up around about 0.5%. Shell is up 3.5%. HSBC up nearly 2%. GlaxoSmithKline has just launched its consumer arm. You want to have a guess where that's sort of sitting right now? Just launched today.
No, no idea.
have a guess at the percentage move. You want to have a little guess at the percentage move?
Well, it's got to be 100% if it hasn't moved before, hasn't it?
No, it hasn't moved before. No, currently down 20%, and I guess that this is sort of like case in this is case in point, right? You currently, you kind of buy something, or you get into a trade, and you have, in all good faith, and this is the reason that we take our profits. Because all of a sudden you kind of turn around and it's down 20%. I mean, it's to be fair, it's launched today. I mean, it might be a buying opportunity ultimately, but yeah, a complete collapse in its market cap right now.
In a bull market, well, for today,
exactly. Yeah, exactly. Yeah, I guess that's the point, because nothing else. I mean, I'm looking around. BT is marginally lower. Aviva's marginally lower. Next is marginally. Actually, when you get down to the lower end of the FTSE, there are some others. Direct Line Insurance Group down 13%. I don't know what's going on there, but But, the big guns, everything's up. Glencore's up 3%, BP, Rio Tinto, Shell, as I said, all up north of 3%. So it's a pretty good day today on the FTSE. And I suspect Monday will probably end up being pretty good. I mean, not that I don't agree with your analysis about going short, George, but I'm wondering whether it's tomorrow. I wonder whether as the week progresses. I looked at last Friday and saw the market's reaction to panicking because they thought the Fed was going to raise interest rates potentially by 1%. After that, CPI figure came up at over 9%, and the Bank of Canada came out and raised interest rates by 100 basis points. Market panics, sell off. Then things start to kind of dissipate a little bit. Some of the speakers come out and go, well, it probably won't be 100 basis points. And market's like, whoa, sigh of relief. And then they start buying it up. Now that was late, really, on Friday. As the session progressed. Oftentimes on Monday, there's a bit of a hangover to that particular move, and I wonder whether that's what we're seeing today. A bit of a hangover from that move. Very little data points out today. I think Japan may well be on. I'm not sure actually, but all I've got right now is hold on. Let me just quickly check because I'm pretty sure Japan were on a bank holiday today. Pretty sure Japan were on a bank holiday
yes,
today.
I think they were.
Right. So Japan's on a bank holiday today. We've got right move numbers, Italian trade balance, nothing there. So, okay, a speaker from the United Kingdom, housing starts, housing market index, and a tick long-term purchases. That's it. So there's not really a lot that's going to move the market today, and I wonder whether we might just see some positive sentiment throughout the session. A couple of pullbacks, possibly, the case, but possibly throughout the session we see some decent gains. Dollar is weakening as we speak, and then tomorrow we might start picking it up again, and maybe get back to trend. Monetary policy meeting overnight from the Australia, and tomorrow's Bank of England's governor, Bailey, and plus the FOMC member Brainard. So there's a couple of people out tomorrow that could start to move the market. Plus we've got ECB out on Thursday, so it could start to move as we go through the week. But today looks pretty fresh to me. Looks pretty good, I have to say.
Well, I mean, if you look at these 8 indices, with the exception of Hang Seng 50, everything else had a bull candle on Friday. So follow through buying is not unexpected. I mean, if you ever look at even the UK 100, although we were selling off, there's still bull candles, bear bull candles. So that follow through is not unexpected. When you have a big bull candle, you're still in a bear market, but bulls will still come in and try and force call it a reversal. That's why you gotta sit and wait. And if they end up as a bull candle on its high, then I haven't taken any trades, which is fantastic. Tomorrow I've got to look at the and say, okay, where did we end up? Did we hit a resistance level or whatever the case may be then?
Yeah, I like that, mate. So basically what we're saying is that the chance of it going down is still there, but we need to get the signal.
Yes.
Yeah.
Yes. Yeah.
So, mate, no US bank holiday. You're going to have to work tonight.
No, actually, I'd love to work, but I've got homework commitments with my daughter. So just after the US markets open, so they open 3:30 to 4:30 my time. 2 hours after that, I have to be out of the market to do homework and stuff, which is fantastic. So I've got a forced closure of George's trading room.
Well, you've got a labour of love. There you go.
Yeah, absolutely.
And of course, you've got your Wednesday show.
Wednesday show is on live trading profits, which 9:30 GMT for 45 minutes.
All right, mate. Thanks so much for today. And I don't know if I'm glad you're back home for you, but it's good for us that you're back home, able to participate in Trading Buddies. Thanks, mate.
Yeah, thanks, good to have you back, mate. We're not in next week, George, just so you know. Actually, we're not in for 2 weeks, are we?
2 weeks, yeah.
2 weeks. So you got a 2-week break from Trading Buddies, at least.
Brilliant.
Yeah. So we'll let you know. We'll give you a little reminder when we're back, but it's going to be early August.
Yeah, summer holiday.
Okay. Enjoy your holiday.
Summer for some, George, not for us.
No, not for
Yeah.
Have a good one, buddy. Catch you later.
All right, take care, guys. Cheers. We'll catch up.
See you, George. Bye, mate.
Bye-bye.
Okay, I'll continue on, shall I? I was talking about Euro Pound. I'm not sure if I'll finish with Euro Pound, but let's just briefly go back on that. I see Euro Pound as getting down to the bottom of this, I guess, descending wedge, if you like, whatever you want to call it. Ultimately, the belief would be that this will break to the high side. And that's where I'm a little bit stymied at the moment, as I say, because the backside of this trade line is suggesting that there's going to be upside here. And that's fine. But I'm still of the opinion if I get a lower high, they'll be wanting to trade that down to there. And ultimately, okay, it can go long. I don't care if it goes long after it's been down there. That's all well and good. But that is this week a game changer bar to the high side. So if you want to trade that, there's your entry above the bar, and there's your stop loss below it. A little bit of a range there, but there is plenty of room to take profit, I'd have to say. The next of the game changer bars for the week was, well, actually pound yen is a game changer plus bar. Sorry, I missed a couple. There is Kiwi CAD and Kiwi dollar before that, or after that, sorry. I'm right, pound yen. So what's a game changer plus bar? Game changer plus bar is one who is a bar that is an inside bar on the previous week's game changer bar. So in other words, the previous week, the week before last, was suggesting that we go long, didn't trigger, and the entire body and high-low close of that candle is inside the game changer candle. That's kind of a double banger, if you like. And these are very, very strong if traded in context. Now, once again, the context here needs to be a primary trend or a dominant chart feature. Now, I see that as a double bottom. I see the primary trend currently is long. Therefore, that game changer plus bar should be tradable to the upside. Now, risk to reward, entry there, stop loss there, 375 pips to get, let's say, 230, 40. That's pretty good. I'm okay with that for you to first take profit. So this is in context. It is completely tradable as far as I'm concerned. And if you wanted to trade that, the levels are 165, around about 25. I'd reckon you'd want to get in 165.25. I'll actually place this order. 165.25. And I didn't go through this morning. I should have. Stop loss will be 161.79. And TP1 will be 167.83. Now, because it's up near the highs and we already have a double top lower high in place, I'll be trading this at a very small risk, so 0.25% only on that. I will be trading that. If we were down here, different story, but we're not. And we already have a potential reversal in place. So this could be a bit of a bull trap here. So you've got to be aware of that. You're trading with that in play. But game changer plus in context, it's worth a try. That's pound yen. Now the next is Kiwi CAD. Kiwi CAD suggesting that we do go long. Look, I think this is going to be subject to two news events. Number one, the Kiwi CPI figures, I think, which are already out. Hasn't done a lot to harm this, but it hasn't done a lot to suggest that it's going to be rampant to the upside either. And the other one is the CAD CPI figures, which I think come out on Wednesday. So if you're trading that one, I think you kind of got your fate sealed by those two figures. You're trading straight into resistance as well, so it wouldn't be my favorite, that's for sure. Kiwi versus the dollar. Are we at a sufficient support level to be confident about trading this long, because the candle is suggesting that's the case? I think the same applies here. If you wanted to trade this long, you're trading straight into that support or former support level, potential resistance. Not my favorite by any stretch, but the game changer bar suggests that we go long. Is the context there to trade this? I don't think it is, frankly. The monthly chart, okay, it's got potential reversal here, but are we trending long? I can't see an argument for that. So for that reason, that would be a no. Dollar CAD on the weekly chart. One of my favorites is to get this short, because I like the CAD, don't like the dollar. Is this the time? Well, it's not in such a bad position, I've got to say. We're pretty much bang on that support and resistance area. It's a bit of a cloud of a price, I'll give you that. Picking the exact level is probably a little bit problematic. And is this it? It's a game changer bar. It's got a little bit of insurance attached to it in that green candle. I did say this morning with my group, I was going to wait on this because I just don't really like the size of the candle to the potential first reward, which is down at this swing here. So I think on a daily chart, I'll be waiting till maybe Wednesday, because I can't see anything here tomorrow. What I'd really like to see is price bounce off something, maybe this level here, come back and take these highs on and fail once again. So a lower high in here makes sense to trade this short to me. Maybe I don't get that chance, because as Ash and I have said, I think we're dollar weak or dollar bearish this week. Maybe that just goes without me, but my rules and my system won't allow me to trade this right now. I've got to wait for that lower high. So I shall. And the last one, which is really, really not bad either, but it's already gone. We need to have a pullback to get into this. And the reason I like this is because it's very, very clear on my chart that we've got a double top followed by a lower high. And that's already in place. You could have argued that we had that. That's the daily chart I'm looking at, by the way. The weekly chart's exactly the same, except that the lower high is not yet formed. And that, to me, is enough of a flag to, even if I wanted to trade this, I've missed the entry, as I said. If price were to pull back into here, I think I would then replace or place the order, because I do like the shape of this. Double top, potential lower high, and there's tons of room here to get your money in the bank and get safe, even down to this level here, which is, well beyond 1-to-1, one would have thought. So if you got your entry below today's, it will be today's candle, and your stop loss up here somewhere, 160 pips, gets you, almost 1.5-to-1 before you hit that support level. So I don't think dollar Swissy is by any stretch the worst one if you wanted to trade on the weekly game changer bars. In fact, that's probably the one that I would go with, dollar Swissy short. But the entry's already been missed. I would wait now for a pullback and then put my order in. I'll be doing that most definitely. So that's kind of where I'm at for the week. I think dollar CAD and dollar CAD we didn't really look at. Let's have a good look at dollar CAD. And that's the interesting chart pattern that I've got here on dollar CAD. I believe, just like dollar Swissy, that the major or dominant chart feature here is this big double top, and we're looking for a lower high. Is this it? Maybe it is. If that's the case, and
wow.
we're at month, and
that's on the gold chart, isn't it, mate?
It's very, very similar, mate. Yes, very similar. I'm really keen on this but it's not the end of the month. If it were, and I saw that, I would, without hesitation, place an order short underneath it and a stop loss above it. But we're looking at a live candle, so I'm not in that position. What I am in a position to notice, however, is that we've got a range in here on the weekly chart. We've had one false break, we've had two false breaks, and I'm looking for a third. If we get this third false break, in particular, if we were to come down, close below the monthly pivot and give me a lower high, then I'm all over this like a rash as well. Dollar CAD short. I just not in a position right now to say this is a trade, but I am in a position to say if it does set up that way, then it definitely is a trade. You just got to be a little bit patient on that. That, of course, is probably 2 weeks away from now. Daily charts. Look, if we were to come back in here, the same is going to apply. And the way to play this for mine would be to let price come back in. You don't want an entry near the monthly pivot, which is untested, but sneak back in here, retest the high of the range, which is this breakout area, right? Same thing, retest there, give you the lower high, enter, get some money in the bank before the monthly pivot, and then ride it down to the bottom. And then, even then, leave something open, because if this does go, as I think it will at some stage, that's the million-dollar question, of course, is when this dollar turns around. It may not be for 2 years yet, but I think it'll be earlier than that, frankly. And I can't wait for it, to be honest. But patience has to be the key here. You could even argue that we've got a double bottom here, you know, and this may play out as a double bottom rather than a double top. But at the moment, it's screaming at me that this is potentially going short. So I'm on full alert, and anything that comes back in here and gives me a lower high, I'm, as I say, all over like a rash. So dollar CAD, dollar Swiss, we've got an order on pound yen, and that's about where I'm at. The pound breakout has happened, but not the way we wanted to trade it. It's gone the other way. So it's worth cancelling that now, guys, if you have put that in position. Had we been trading the old system, we would have caught that, but not to be the case. So delete that order, and it looks, for all intents and purposes, as though the market's got a bit of a fire under it or in its belly today, and the dollar looks to be very weak. Everything against it looks to be very strong. I think we kind of saw that coming, eh?
Well, do you know, as I say, mate, we talked about this yesterday in the market analysis, and that was exactly what was said. So it's not unexpected. I guess the thing now is to not get kind of too caught up in the success of it, because it is only Monday, and because it's so hot right now. You know, by Tuesday, Wednesday, does it turn? It could. You know, we are seeing sort of some opportunities today. Well, they've passed now, but we are sort of seeing that dollar weaken certainly today. But whether it changes through the week is always going to be a question. So I would still err on the side of caution for everybody, and not just expect the dollar, you know, to weaken throughout the week. It may, but remember, the move to the upside has been incredibly strong. So there'll be a little bit of defending going on. I just think that we've probably come a long way with the dollar. So for some profit taking is sensible before a Federal Reserve meeting, which is out in a couple of weeks, not knowing what they're going to say. I mean, you know, the consumer price index has been incredibly hot. Recession concerns suggest that they're going to need to go, you know, they're going to need to keep going. But it's possible that they see it differently. And for that reason, when the market is particularly high, I would suspect a bit of profit taking into that meeting is probably likely.
Yeah, look, as you say, it's Monday, and there's a long way to go in the week. In fact, if I were to see something here to suggest that today's price action could change, and that's entirely possible, I would be looking to trade this short. This is euro dollar, right? Yeah. But there's nothing here right now to suggest that that's going to be the case. You're riding on a principle or a probability factor of about 70 to 75% that at some stage today the daily pivot will be tested. So that's always going to be in my mind, but I'm not going to say, okay, we've hit DR2, let's go short, because that works sometimes, but it doesn't work often enough to bank on. What does work often enough to bank on is if you get a reversal pattern here of some kind, and that's going to take a little while to form, obviously. But by the time US session gets well and truly wound up, you may find that there's a double top sitting here, or there might be an evening star sitting here, or something like that. I don't think you'll get a head and shoulders by that time, but you may get that. And if that's the case, and then you get a lower high on the back of that, gee whiz, there's a nice little bit of, I won't call it blue sky, but there's certainly some open territory to get some money in the bank if that daily pivot test does occur. So, I don't write that off ever, because it's always there as a number.
Yeah.
I won't be in front of the chart, sadly, at that time, if it were to have happened. But what I'm looking at the moment doesn't suggest it's going to either. And as I said before, when the market reverses, as it looks quite capable of doing right now, and I'm not saying it's going to reverse and go up here, because I don't believe it will, just yet anyway, but it could certainly go to this level. When that happens, the daily pivot is ignored quite often. So if we are to follow through here today and through the week, we may not even see a daily pivot test till maybe Thursday. We'll see.
Yeah, anyway, what is that level, mate? Where's the solid red line?
Oh, why is it there?
No, what's the number?
The number is 10445.
And what current? We're currently at parity.
Yep. I've got to. Maybe that's in. Oh no, it's in the right place. Yep, that's where it needs to be.
Yeah. 10445. So in actual fact, half % move.
Yeah. Yep.
So 0.5% move on the euro over the course of the next week is. I mean, that sounds pretty probable to me. Because when you look at certain charts and you look, you look at certain time frames, you kind of go, "Oh, that's a long way for it to get." But actually, when you break it down into a potential percentage move, it doesn't sound very far at all, does it?
Well, I think I said when this happened, this break, and I would have said when that happened, I'd be very surprised if we stay below that level for any period of time.
Yeah.
And the reason I say that is because of history. Every time we've come here in the past, we have not been able to sustain parity. Now, I know we're in different times, but here's the last time we were here. That period was 20 years ago since we were really at that level. And why right now? And that's the question I always ask myself when we come to a major level. Why right now, at this moment in time, is price going to do something that it hasn't done for 20 years? Or, why is it going to go through that level? And both of those levels are on the chart here. That's why they're on the chart here. It's that level there, and it's that level there. But parity certainly comes into play, and that's where we're at, right? So
I just looked on the dollar index.
Got to expect a bounce.
You got to expect a bounce. I agree. I mean, the dollar index, from what I can see, down around about maybe 0.8% before we start to really sort of hit some genuine support. So that would correlate quite nicely with a 0.5% move on the euro. Yeah, so I think it's higher than that. I think that's the kind of the low ball. I think that the previous peak, the next peak up is it would be the area that I'd be starting to get a little bit concerned about any further downside in the dollar, just because it's been so strong. Yeah, there.
Yeah, 106 maybe.
106. So what are we at right now? 107.
Yeah.
So we're looking at a 0.8% move, and that's that it would, as I say, that confirms quite nicely a 0.5% move potentially on the euro.
I wonder what happens in 3 or 4 years when we're talking about this chart and I say, oh, why didn't I place that trade short here? Remember last week I said if I put my stop loss here and just entered at market, I wonder if that will actually play out. And I haven't done that, guys. Mind you, I have not done it, I promise you, because I haven't got the kahunas to do it.
I don't think it will, mate. I mean, you know, I did something with silver. I traded it on the lows on Friday for this very reason, because I didn't want to trade the dollar short, but I thought silver long for a move would be kind of cool. So I am actually in a position on silver for this reason, but I won't be holding it for too long. I just think, you know, maybe another. Silver's different because it's nice and volatile. So you get when it moves, it moves quite a lot. It can move 10% in a very short period of time, while the dollar's moving 0.5%. So it seemed to be a decent choice, but I won't be keeping it for very long.
I'm starting to look at silver myself, not necessarily as a trading opportunity, but it's less than $1,000 a kilo at the moment here in Australia. Yeah, and we don't have to report anything over or under $5,000. So I can go and buy 5 kilos of silver at the moment, and nobody knows except me.
I think it's pretty good, mate. I mean, it's, you know, as I say, I'll very, very quickly show you the trade, because it's one of those that is similar to what you're talking about, and I sometimes think that these things are worth taking a punt on. Where are we at? Here we go.
Yeah, look, silver gets held down for all sorts of reasons, as I understand it. But you know, we looked at this a week or so ago, and if that's not a buy zone, then I'm not here. You know.
Exactly. And as I say, I think this area looks pretty good. It's around about 1950, possibly 20 if you look at the. But you know, this is where it looked pretty good to me. I picked it up mainly because of this. I mean, we're looking at a monthly breakout area here.
That's exactly the line I've got in my chart. Yeah. Yeah.
Which is that to me was a buy zone. I thought, you know, it's well worth taking a punt here, because how much lower can it come, even if it does come down? And if it does come down, it's like to come back and test that line and get me out anyway. So I thought it was well worth it. Does that mean I think it's going to here from here? I'm still a bit, you know, I don't think. I mean, that's where the kahunas come in. I don't think I would have the propensity to want to hold it right the way through. I'm still looking at levels that it's probably going to come and reverse, and I might get back in again properly at some point. But right now, I would just sort of see a potential move to this point, maybe. Could be lower, and you know what I was just saying about the dollar. I'd be sort of like probably looking there might be an area, this might be an area. So I'm not looking for much before I'm starting to say. I just don't feel comfortable holding anything against the dollar right now. You know, the dollar to me looks like it could come down to this point. Maybe it's just a low of that point there. But could be that. You know, last week's weekly pivot, which is the similarity with what you were saying about 106.28, whatever. That's not that far before it reverses, and reverses and tests the high again. Doesn't mean it's going through, but if it tests the high again, gives us another signal, then maybe we can put that position on properly and say, you know what, we're ready to hold now. But I'd quite like to see some of the data points or the sentiment or speeches give me a reason to actually short the dollar and go and trade the other things long over a longer period of time.
Yeah, it's you know, I don't want to get into the nitty gritty of it or the dark side of it, but you know, silver's a manipulated commodity, really.
Very much so.
So you've got to bear that in mind, and that's what you were saying. You know, it's very, very difficult to trust to hold it. Physical, I think, is worthwhile, but to hold a trade with silver in it, in particular long, is just a scary proposition at times, because you know what they do. They knock it on the head when they want it.
Well, this is it. Do you know, mate, interestingly, and this is the battle that I've kind of got with Bitcoin right now. It's interesting that with Bitcoin, within a very short period of the institutes being involved, it tanked. And because they are involved, where everybody's sort of like expecting Bitcoin back up to 100,000 beyond, it's not really, we're not in the same environment anymore. Now the institutes are involved, they can really manipulate the price and potentially keep it relatively suppressed and let it ease rather than sort of having those explosive moves. I'm not saying that it can happen just yet, because I don't think the liquidity is there. We're talking about billions rather than trillions. So it won't take a lot to move the market in cryptocurrencies. But now they're involved in it, it just doesn't seem as attractive anymore.
Yeah. Look, well, it was never attractive to me, but more than happy to let other people deal with that. I find it very, very difficult once I understand what's going on in the background to be confident about any of those conveyances. I think, for mine, that's why I stuck with currencies for so long, and the major currencies for even longer at the right time of day, because it's harder to manipulate them at that time of day. Now we've got supercomputers. It really is a task to trade, in particular those commodities that you mentioned, and have a lot of confidence around.
Yeah. Anyway, mate, let's wrap it up.
It's a minefield if you start.
It is a minefield, exactly that. I mean, talking of that, we were going to talk about stocks today, and I have to say, defence sector looks pretty attractive to me. And maybe we'll talk about a stock called BAE Systems. Oh, and incidentally, uranium. Now, what was I hearing about uranium the other day? I'm starting to. I'm a convert. I'm starting to come over to your way of thinking. I need more, but and I need to go back to hear what it. I know where I heard the quote, but I can't remember exactly what it was. So I need to go back and listen to it, and we'll talk about it maybe on Thursday. Can't trade it directly off the FTSE, so it makes it a bit more tricky for me. But yeah, so we can maybe have a quick stock check on Thursday if nobody else is in. But aside from that, mate, I will let you go. And everybody else in the room, thanks for joining us. As always, thank you to Marlon for looking after us. Thanks for being my training buddy, as always, mate. And to George, he's probably not in the room or listening anymore, but thanks to him too. And have a great week.
Yeah, mate, you too. Enjoy it, and hi ho silver. See you later. Have a great week ahead. Bye for now. See ya.